Hey, traders. So, I'm going to do a little video, and I always get asked questions like, Steve, do you ever use indicators? And the answer to that question is, if I would have showed you my charts years ago, um, you would have seen about 10 indicators on it. I was a TA junkie. I mean, really, I was a TA junkie. It was really bad. And, back then, probably even longer than that, it's when I really started to do some to do some trading off the floor and, on the screen. And, um, the first place that I went were indicators. And I can remember even going back further than that, like 15 years, when, the MACD came out and, all of these indicators just came out for the very, very first time. And I used them all, I studied them all, I tried them all, and, pretty much every single one of them at the end of the day was flawed in a lot of ways. So slowly over time, I got rid of all the indicators and I just concentrated on price action. But that doesn't mean that I don't continually look at and test indicators because I do. Whenever I see something and I'm bored, because I'm usually bored sitting around here, especially when I'm trading, right? I'm bored. um, I know most people think trading is exciting, but if you're excited when you're trading, you're doing it wrong. The exciting part is when you collect on a trade, but you have to be very calm and patient waiting for those to happen. So I want to share with you an indicator that I recently started testing, and it's also going to get you really excited because I'm going to show you one, two, three, four, five, six, seven, eight times that this indicator gave a signal that produced well over 1,000% profit just this year. Okay, and then before you get too excited, um, I'm going to explain to you, you know, its weaknesses. Okay, well, I'll explain to you the catch. There's always a catch, right? So we're going to go back, and I did this manually, and we're going to go to 1227. We're going to start right here, and what we're going to do is we're going to look for this indicator to flip. Okay, this indicator, by the way, is called a PMC. It's something called a person's market something. Now, why don't I start there? Sorry, I'm really not organized. I'm just kind of bored, so I'm doing this video. What this indicator actually does and why I tried it in the first place, because most indicators are complete rubbish. But the reason why this one I got a little bit excited about it was because this indicator measures the difference between the underlying and the S&P 500. Now, I really, really, really like that idea. Most of you know that I will trade correlated markets, and this is kind of a shortcut to a correlated market. Now, I don't know the exact calculations for it, but it actually doesn't trade. It's strength versus. I believe it's the differences between the moving averages of the underlying, in this case Apple, and the S&P 500. So it's strength versus a basket, right? So usually when I trade that type of market, I'll do something like this. Something like this, where I'll have the underlying, in this case will be Apple, and the basket, which in this case will be the S&P 500, right? Now this is actually the S&P 500 versus the IWM. But I've made a lot of money trading correlations like this, okay, where you're looking for, whenever you're trading a correlation like this, you're looking for where they deviate, and that opens up a tremendous amount of opportunity. So just to give you an example, when you have a big deviation and separation between two highly correlated markets, For example, you can see here that, if I can get an example, right here. You see right here on this day where on 613, the orange, what do you call it? The yellow one is I believe it's the S. Yeah, the yellow one is the S&P, and the blue one is the IWM, okay, or the Russell 2000. Now you'll notice here they both make highs here on this day. Do you see that? Here and here they make a new high. Now watch what happens. On this day here they separate. The IWM goes higher, but the S&P goes lower. And then right here on this day it even goes higher and the SPY goes lower. Now, these are fantastic opportunities because you can take advantage of those. And what I would probably do in a situation like this is I'd probably short the S&P 5, the IWM, and I would go long on the spider. Okay? And yeah, what would have happened is you would have seen here, it would have worked out really well up until this day right here, where I could have covered my short trade. Now, if I was long-term bullish on the spider, I would have just held on to my SPY trade. Okay? So a lot of times, I will use correlated markets when instead of doing one market directionally, I'll look at the correlation. So right now we can see on this particular day, the IWM is making all-time new highs. Actually, ironically, these are the highs of the pre-bubble, of the pre-tech bubble. It's finally up at new highs, and you can see that there's the S&P isn't. Right, the S&P is having a weaker day. Right, you can use this intraday. You can use this on a longer-term time frame, but a lot of times I will trade highly correlated assets against another asset. So I don't like technical analysis, and so there's a big precursor. I'm sorry for the long story, but believe me, it's going to be worth the wait, because I'm going to show you how you're going to make 1,000% using this indicator. So to get back to the indicator, let's go through. And again, this is comparing Apple versus the S&P 500. If you really want to go and check this out, it's called the Persons Market something or other. You can Google it, PMC. Now I've changed it to a line chart. It actually looks pretty good like that, and I can just see it a little bit easier. And this is the moving average of it. This isn't actually the actual indicator. This is just a moving average of it. So let's go back to 1227 right here, where this flips green. Okay? See, on this day it flips green. Now, you can't just take it in a bubble. Right? You have to understand a little bit of order flow, you have to understand a little bit of price action, and you have to understand, just some basics. But if you would have taken it here, if you would have bought calls on this day, and you can see it goes up for 1, 2, 3, 4, 5, 6, 7, 8, up until I believe this day when it flips right there. That's a 32% return. So if you would have bought $1,000 worth of calls on that day of the at the monies, that gives you a 32% return. $352 on a $1,000 investment. Now it flips red. Now you might say, Steve, well, why didn't you take it red? Well, because there's a reason. We hadn't got enough liquidity at that point in time. So I kind of filtered this with a little bit of a liquidity basis, meaning that I want liquidity to be taken out before I take it. So on this day right here, it flips to red. Now, we didn't get liquidity, but when we got red up here on this day here, and we did hit a big pocket of liquidity, from here all the way down to here when it turns green again, that is a 120% return on an options trade. If you would have invested $1,000 on an at-the-money 30-day strike, that is 120% on your money. Go to 2.9, which is 2.9. Now see here it flips. Okay, on this day it flips to green. Now again, we didn't get liquidity, but I waited. Actually, we did get this liquidity right here. So on this day right here, if you flip the calls and you were to take it from 2.9 all the way back up to here, on this day here, actually what I actually did was I took it on this day. So the reason was this was earnings. So I didn't want to trade it right after earnings. So add that as a filter. So no earnings trades. So here, when it turns green, from here all the way up to here, on that day right there, it's a 580% return. $1,000 trade turns into $5,890. Okay. On 3.6 right here, it flips again. Now again, we didn't get liquidity. I wanted liquidity. Here it flips over, and look at this. From here all the way down to here, when it changes again, for some reason that's not as big of a return. It's only, I think it was 23%. No. It did flip. No, this one was bigger. Forgive me. That was a $3,000 trade, 320%. Now watch again. It turns green here, but we don't get liquidity. Okay. Oh no, we did. Right there, we ended up hunting liquidity. And this is the candle that I got in on right there when it was green. And that one there was a very small winner for $230. Okay. Now again, I'm waiting for it to get liquidity. It doesn't get it up here when it flips, so there's no trade there. Here we do pick up some liquidity and it flips. Now watch this one. This one is 320%. Now it was during an earnings as well too. So I didn't take it on the earnings day. I took it after the earnings day. So again, following our rule, don't follow this on an earnings day because it's going to crush you. So there you go, 320%. It turns red up here, and we do not have any liquidity that's been taken out. I hold it until this day when we do take out liquidity, and then this one brings a 37% return. And you get the idea. Now, so that's just 1 year of trading this indicator against Apple. Now, before you go, holy crap, I'm going to go and run out and test it. I was really excited when I tested it on the first day. And I was like, wow, this really works good. And again, the only reason why I love this indicator is because it's comparing it to something. It's comparing one of the major properties of the S&P 500 to the S&P 500 for strength versus weakness. So it's telling me when Apple is stronger than the overall market, and it's telling me when Apple is weaker than the overall market. So if you go, and so I was very excited when I first tested that, and I was like, wow, finally an indicator that actually works. I mean, I was ready to give up everything else that I do and do nothing but this for the rest of my life. And maybe I will on Apple, but it doesn't give that many signals. I mean, it looks like it gives like maybe like 10 signals a year, right? So on Apple, even when I went back and tested it, it still worked well. I went really far back on Apple and tested it. However, when I tested it against other big names, right, like Microsoft, it sucked. When I tested against Amazon, it sucked. Facebook, It sucked, right? JPM. It sucked. It was okay. Wasn't I shouldn't say suck. Forgive me. It was just mediocre. It still was winning. There was definitely winning trades to be had with it. XOM. It was okay. Again, J&J. It was okay. Gave a lot of false signals, and because you want to trade this using options, um, those options expire, and you know they just don't work as well. So I want to put a little challenge out to you guys. I think I did it with Apple, I did it with Microsoft, I did it with Amazon, I did it with Facebook and JPM. I think I stopped there because Apple was flawless, almost 100% winners. Microsoft was around 55, 60%. Amazon was about 55, 60%. Facebook was 55, 60%. And JPM was worse. So I'll put a little challenge out to you guys, okay? Since I shared this with you, and if you want to go and do some back testing on it, um, there's people out there that know how to program Thinkorswim. And by the way, I have not found this indicator on any other platform other than Thinkorswim, right? But again, you want to take big components of the S&P 500 because this is comparing it to the S&P 500. Hold on a second. I'll see if I can get something here. Okay, I did find something. So here's the inputs for it, okay? This is called I'll bring it up here. So here's the details of it. Okay. The person's market catcher is a variation of relative strength comparative analysis. And that's why I liked it, because I do like to do, again, comparative analysis. And there's where it is. Now, on this particular indicator, I found that if we remove I blacked out all I'm using is the EMA, right? If you can put the difference, I drew it as a dot, right? You can put it like a histogram, right? And you see there's what it looks like, a histogram. So I just have the MA of that, right? And I find that's a little bit better. I found that if you just followed the histogram, it was okay, but I found that following the MA seemed to be better, right? So I'm going to put little challenge out to you guys, right? There it is right there. Go and play with it. Let me know how you guys do with it. If you can find it on any other platform, let me know, right? Doesn't really tell you exactly what it does, but it gives you an explanation of how to use it. Doesn't actually tell me I usually like to look at the math of these things, but it doesn't actually show the math of it. So there you have it. Hope you guys enjoyed it. Again, I don't use indicators, but I do use comparative analysis versus one stock versus another stock, okay? And I only apply order flow to those situations. I like this indicator primarily because it was kind of like a shortcut to looking at a comparative chart. Okay, so far I'm going to make this video the best indicator I have ever used in my life on Apple. On other stocks, not so much. But on Apple, this thing made 1,000% in 4 months, 5 months, using options. More than that. 32. Yeah, over 1,000%, 1,200% using nothing but options from 12/27 to 4/30 of this year. Okay, hope you guys enjoyed that. Let me know how it works out. Send me an email, Skype me, say hello, SSP Trader. Always like talking to people. Hope you guys are having a great day. Other than that, I really don't use indicators, and the main reason is because of this. Even when you find a really good indicator, it doesn't work on any, like on all stocks. It's very, a lot of indicators are very stock specific. Don't ask me why, right? Or they're hit and miss, hit and miss. This one is about the best that I've seen. I back tested it even further. On Apple, I went back, if I remember, almost 2 years, and it produced even better than that. I just didn't write it all down. I just put marks on the chart. Okay, so you can't just trade it in a vacuum. You have to understand order flow. You have to understand liquidity. You have to understand that markets move from low liquidity to high liquidity, low liquidity to high liquidity. You have to understand those basic concepts. You have to understand value, all the other things that I teach. But if you want a really cool little indicator and a nice visual representation of how strong is any stock versus the S&P 500, I like this. Currently right now, JP Morgan is underperforming the S&P 500. So if I was going to short the S&P 500, or if I wanted to be short the S&P 500, wouldn't it be better to short JP Morgan? Especially if this was a large component of the S&P 500. Let's look at all FANGs. So here's Apple. It's outperforming the S&P 500, so you want to stay away from that. Eventually, Apple will get overextended, and if I do want to short, this might actually really be a good one. But there's Apple. Let's look at Facebook. Right now, Facebook is underperforming dramatically the S&P 500. Let's look at Netflix. It was underperforming, but it just recently flipped back to overperforming. Okay, and then let's look at Google. We'll do FANG. And Google is underperforming the S&P 500. Okay? Love this little indicator for what it does. For what it does, it's a really cool graphical representation. The person's market, whatever it was. Let me know how you guys like it. Leave some comments in the videos below as to what you find. I'm going to title this, the absolute best indicator that returned 1,000% in 4 months, but only on Apple. There's always that little caveat, isn't there, guys? Right? And that's what a lot of these other people that try to get you hooked on technical analysis, they don't tell you when things don't work. They only curve fit things to when they do work, right? And that's not good. Okay, thank you. Bye for now.